liquidity in the financial system and support the federal government's short-term funding requirement. The auction, which is the second Nigeria's Treasury bills issuance for May, was disclosed in an official tender notice issued by the Apex Bank on behalf of the Debt Management Office under the federal government's second quarter borrowing calendar. According to the notice, the CBN will offer the instrument across 3 maturities through the Dutch auction system, comprising 100 billion naira in 91-day bills, 5 billion naira in 182-day bills, and 500 billion naira in 364-day bills. Authorized money market dealers are expected to submit bids electronically through the CBN S4 web interface before the auction starts. The Apex Bank stated that the minimum subscription for the exercise is 50 million naira, while bids are to be submitted in multiples of 1,000 naira thereafter. Dealers are also permitted to submit multiple bids on behalf of institutional investors and members of the public. The result of the auction is expected to be announced on the same day, while allotment letters for successful subscribers will be issued on Thursday, May 21st, 2026. Successful bidders are also expected to fund their account with the CBN not later than 11 a.m. on the settlement date. The CBN, however, noted that it reserves the right to vary the amount on offer depending on prevailing market conditions. The Nigerian Midstreams and Downstream Petroleum Regulatory Authority say Nigeria's petroleum stock sufficiency declined to 17.7 days in April, despite significant improvements in domestic refining output. The regulator disclosed in its April fact sheet that premium monitor spirit, also known as petroleum stock levels, narrowed even as total daily supply rose to 44.4 million liters per day. According to the report, domestic sources accounted for 40.7% of total supply during the month. Imports, however, dropped sharply to 3.7 million liters per day. NMDPRA stated that Dangote Refinery supplied the entire domestic PMS volume, while total refinery output stood at 53.6 million liters per day. The regulator added that the refinery operated at near 100% capacity utilization for most of April, with closing stocks points at 10.6 million liters per day as of March. According to the fact sheet, the increase reflected higher volumes trucked into the domestic market amid sustained economic activity. Other petroleum products also recorded increased demand pressures, except for the liquefied petroleum gas consumption, which declined slightly to 4,800 tons per day. The Nigerian Naira today traded with mixed performance against the against the United States dollar across the official Nigerian foreign exchange market and the parallel market amid continued demand for foreign exchange. Published data show that the Naira closed at about 1,373.65 per dollar at the official Nigerian foreign exchange market window. This is in comparison to 1,373.50 naira recorded in the previous session, indicating a marginal depreciation of 15 kobo. At the parallel market, also known as the black market, the dollar exchanged around 1,399 naira for buying and 1,400 naira for selling in major trading hubs including Lagos and Abuja. Market reports indicated that the gap between the official and parallel market rate remained relatively narrow, reflecting ongoing efforts by monetary authorities to stabilize the foreign exchange market and improve liquidity. Analysts attributed recent movement in the naira to sustain demand pressure from importers and businesses, despite interventions by the central bank aimed at boosting dollar supply in the formal market. The federal government has unveiled fresh plans to drive affordable house delivery through cooperative societies, digital finance, and strategic partnerships, declaring that conventional mortgage systems alone can no longer solve Nigeria's housing crisis. Speaking at the 2026 Cooperative Housing Summit Africa in Abuja, top government officials and stakeholders said millions of low and middle income Nigerians remained locked out of home ownership due to rising housing costs, weak financing structures, and limited access to mortgages. Minister of State for Agriculture and Food Security, Aliyu Abdullahi, disclosed that the government was pushing reforms to reposition the cooperative sector as a major vehicle for affordable housing and financial inclusion. Abdullahi revealed plans for the establishment of the Cooperative Bank of Nigeria designed to provide accessible financing for cooperative housing schemes, mortgages, infrastructural development, and community projects. According to him, the proposed bank would operate under a cooperative ownership structure and focus on undeserved Nigerians, especially workers in the informal sector. The minister also said the government was digitizing cooperative operations nationwide to improve transparency, financial management, access to credit, and investor confidence. He explained that digital finance platforms would simplify mortgage repayment systems, housing project monitoring, and cooperative member verification. Minister of Housing and Urban Development, Dr. Mutaka Dharma, represented by Samuel Pemi, Director of Public Buildings and Housing Development, noted that technology-driven finance would play a major role in improving mortgage administration and housing access for citizens in both formal and informal sector. The latest business expectation survey of the Central Bank of Nigeria revealed insecurity as the most significant challenge confronting businesses in Nigeria, surpassing taxation, high interest rates, and bank charges. The findings underscore the extent to which risk management has become central to business survival in an economy increasingly shaped by structural vulnerabilities rather than demand-side pressures. In the April edition of the survey, insecurity ranked highest among business constraints with an index score of 74.1, high and multiple taxes followed at 70.5, while high interest rate scored 77.4. Businesses also cited high bank charges at 62.8 and stiff competition at 61.8 as major operational challenges. According to the Apex Bank, the results indicate that the business environment was shaped more by risks and cost pressures rather than by demand-related factors. Highlighting the persistent structural impediments facing enterprises across sectors. The survey conducted sampled 1,900 firms spanning industry, services, and agriculture with a response rate of 99.4%. Despite the difficult operating environment, businesses maintained a cautiously positive outlook on the economy, although confidence moderated from the previous month. The overall business outlook on the microeconomy stood at 3.1 index points in April. Respondents projected stronger sentiment ahead, with confidence expected to rise to 16.9 points in the following month, 27 points over the next 3 months, and 34.6 points within 6 months. However, firms continue to express concerns over deeper structural risks. Energy-related challenges were identified as the most pressing concern by 35% of respondents, followed by governance issues at 33% and geopolitical uncertainties at 14%. The survey also revealed a sharp regional divergence in business sentiment. Sectoral analysis showed that the industry sector recorded the strongest confidence level at 8.8 index points, followed by agriculture at 2.7 points and services at 1.5 points. Among subsectors, mining and quarrying posted the highest confidence reading on business operations at 65.2 index points, ahead of manufacturing